Welcome and thank you all for joining us today. Today's webinar, COVID's Impact on Payroll Year-End Reporting with CPA, will begin shortly. First, I'll make a few technical notes before we begin. On the webinar panel, the blue or orange flower icon on your screen, you'll see a handouts pane. Here you'll find today's presentation where you can open, download, and save. There's also a questions pane where you can enter your questions for our panelists today, where we'll do our best to answer as many live questions throughout the presentation. Following today's presentation, you'll receive a recording, so you don't need to worry about frantically taking notes, and this will always be available for you to go back if you had questions or wanted to rewatch today's presentation. And with that, we will now begin by introducing Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Thanks, Alexa, and welcome everyone to our weekly webinar. Many of you have joined us over a number of weeks over the past 10 months or so, and some of you are new, so welcome to those who are new. My name is Laura Jones. I'm the Executive Vice President of CFIB, which means I do a little bit of everything. I'm joined by my very capable colleagues today, Corinne and Rachel, and also we have two special guests, Tina Beauchamp and another Laura. We have another Laura on the call today, Laura Angelo, and they're special guests from the Canadian Payroll Association as we get to the really exciting topics around taxes. So we'll introduce them, we'll pull them up in a moment to introduce them more formally. But before we do, we will just get to a few other items, and we've got a few quick updates for you before we dive into the exciting topic of taxes. So if we go to the next slide. There we go. Our commitment to you, of course, is to keep things updated on our website. So I won't say too much about that other than to just note that this is where you can find us, CFIB.ca/COVID-19. And also there is our helpline number. And of course, we have counselors across Canada who are able to take your calls on any number of topics and work to get you the answers you need. On the next slide, we like to start these webinars with a few quotes, and given today's topic, we thought it would be appropriate to kind of focus in a little bit on taxes. And even Albert Einstein thinks the hardest thing in the world to understand is income tax. I really like the last one too. Dear CRA, I'm writing to you to cancel my subscription. Please remove my name from your mailing list. Snoopy, I think there are many times that many of us would like to do that. And a couple of other quotes there on the important and exciting topic of taxes, which we're going to try and make interesting, entertaining, and fun today. Okay, so on the next slide, we are going to get to those to that tax thing, but first we're going to cover off a few quick what's new before we get to PD27 and T4 changes with our special guests, and then we'll of course spend as much time as we can on your questions. And I also wanted to remind everyone that we have another webinar coming up on It's All Taxes All the Time right now. So next week's webinar on February 4th, CRA will be our special guest to answer questions on tax filing. But we specifically have some guests here today from the CPA because CRA was didn't have someone that they could specifically have to answer PD27 and T4 changes, is what I understand. So I think this will work out nicely. These two webinars will be very complementary. If we go to the next slide. I also like to just give a quick update on some of the research we're doing. This would be could be its own big webinar because we've got we've got a whole bunch of survey results from many of you filling in our weekly, our now every other week surveys, and we're getting them into government regularly. But here are the ones that are hot off the presses. Worries that are up include business cash flow, overwhelming stress, and debt. So we've highlighted those in blue. But as you can see, most business owners across Canada still have a lot of COVID related concerns, and we continue to track this over time and ensure that both government and the public know what's going on with small business. So hopefully the policies will be better for them being aware of your concerns. Obviously, that's a very big and important job, and we thank you very much for continuing to provide us some feedback. So here's just one of the many results we have from the most recent survey. On the next slide, I believe this is where I am bringing my very capable colleague Corinne to join us and to talk a little bit about some other things that are going on beyond the tax world. So Corinne, over to you.
Yes, and then before we jump into all things tax, we wanted to make sure that you knew what was happening in Ottawa. Well, first and foremost, Parliament returned this week, and I can tell you personally that the energy has changed this week as a result of that. It was a fairly, a little bit easier to manage time to get through the last 3 weeks, and this week is back to sort of incredible intensity. So definitely the politicians are back in session. And as a result, federal election rumors are flying all over the place. So we'll have to wait and see what happens, what that means. We don't know. Likely, if it does happen, it'll happen sometime in the spring or potentially in the fall. But likely we're facing an election sometime this year, given this is still a minority government at the end of the day. And minority governments don't tend to last more than 2 years. And we're coming up to 2 years this fall. So we'll have to see where that goes. Just a heads up on that. We also want to make sure.
Corinne, I think that's actually kind of good news that there's the gearing up, not the election piece of it, but the gearing up again, because I know your phone is ringing a lot more and our calls are being answered a little bit more quickly on, particularly for those members who are out there waiting for changes to programs that are so long in the tooth. And, week after week, when we have to say we don't know yet, it's frustrating for us. We know it's if it's frustrating for us, it's probably 100 times more frustrating for those members on the webinars waiting for those. So the fact that they're kind of back at it a little bit is actually kind of good news.
Yes. So hopefully, as we go forward in the next week or two, we'll actually have more answers than we've had in the last few weeks. So that is essentially what we're hoping that will lead to. So we want to let you know too that there are some deadlines coming. So there is a deadline of actually January 31st, or I think maybe it's February 1st, Rachel. I have to sort of check that with you to apply for the first 5 periods of the Canada Emergency Wage Subsidy. So if you haven't yet applied for those first 5 periods, that's from March to July of last year, your time is running out and you need to sort of get your applications in. So just a heads up on that. There's also some deadlines. So is it the 31st or is it the 1st, Rachel?
It's February 1st.
February 1st. You have till Monday.
1 to 5.
Yes, to get your applications in for those periods if you've not yet done it. The other to be aware of, there are some provincial support programs that are coming to an end. So we are expecting potentially that they'll be renewed, a couple of them, but the ones in Manitoba, Saskatchewan, and Newfoundland and Labrador are all ending this week. We are hearing rumors that in Manitoba and Saskatchewan it may be renewed, given that lockdown measures are still in place in both those provinces. But we're not sure about Newfoundland, and since things are not quite so shut down in Newfoundland, it's unlikely that one will be. Finally, though, the Canada Summer Jobs Program, we keep telling you about it because it is such an improvement over the normal program that if you have an opportunity to hire somebody or you feel like you could use some young people in your business over the course of the next year, it is another option for you. That deadline too is basically, I guess, tomorrow. However, we're pushing hard right now for them to extend that deadline, give businesses just a little bit more time to apply. We haven't heard anything yet, but we're hoping that we can see an extension there. But not having heard anything, try to get it in by tomorrow just in case.
Corinne, just on the provincial programs, this might be a good place to tell everybody that while we're not focused on that on this webinar, in the appendix, right at the very beginning of the appendix, there's a list of all of the provincial programs that are available. We've highlighted in yellow where deadlines like the ones flagged here are coming up, and that's been very recently updated. So it's got all the current information, province by province, on provincial programs, and that's changed a fair amount, I would say, in the last 3 to 4 weeks, with some provinces coming online with new programs opening up. So you might want to check that out if that's of any interest to you.
Yes, please do. Thank you for the reminder. We did update that just yesterday, so it is up to date. So please take a look at that if you're seeing if your province has anything that might be of use for you. Also wanted to let you know, as we talk about tax, that obviously we're getting into the tax period. We have had a number of inquiries from business owners about whether or not there'll be a tax deadline deferral this year. Nothing yet. Everything still is to be, filed and paid as normal. However, we have submitted a letter. We have started some requests of CRA and the government to potentially look at deferring some of these things for those that need it. If you don't, then you should continue to file as normal. But for those that maybe it's a little tight right now to pay those taxes or get the filing done because you're sort of occupied with other things, we're hoping we'll get some leniency out of CRA. So hopefully more to come. We want to let you know that we are putting pressure on them right now based on the feedback we've been getting from some of our members through our phone lines and through these webinars. And then to Laura, who is our guru on red tape, I let you sort of talk briefly about the last one.
Just a quick note on this. I mean, tax is the big focus of today's webinar, but of course, right behind taxes, regulation and red tape is a big concern for our members, and we've been putting a spotlight on that for a number of years, pushing for more accountability. Incredibly, when we started this 10 years ago, governments were not, most governments weren't even measuring, didn't even have a measure of how much regulation there was on the books. So that's something we've been pushing for, and we highlight a lot of regulation or good regulation, but stuff that's in complicated language, forms that are longer than they need to be, wait times that are ridiculous, things that go into kind of black holes in government and you don't hear back from. So that's something we work on. Nothing for you to worry about this year. I'm just letting you know that it is our Red Tape Awareness Week, and we're getting a fair amount of traction with governments who are very worried about their grades on our report card, for example. So just as an FYI on some other files that we lobby on. And with that, we will get, I think, to the main point of the webinar, Corinne, or I think we have a little bit more.
Yeah. The more important part of what's new. So next slide. So also announced just this week is a new program. So we wanted to make sure we gave the details of that program. So we're going to spend a bit of time, just 5 minutes or so, talking about this new program that's called the Highly Affected Sectors Credit Availability Program. It was announced on Tuesday of this week. And what it is it's a loan between $25,000 and $1 million. And essentially, you can get up to $6.25 million if you have a bunch of associated entities. But that loan is essentially guaranteed by the government, in this case, BDC. It has a consistent interest rate. It's 4%. You can get up to 10 years to pay it back. They don't require any kind of personal guarantee, which is, as you know, fairly unusual these days. It's going to start to become available at your bank, your primary bank, starting Monday, February 1st. You'll have until the end of June if it's something that you're interested in applying for. And essentially, if your bank, so they're going to start at the big banks, the 5 big banks, starting Monday, but it will eventually roll out to many other banks over the course of the days after that. So, but if you happen to be at a financial institution that doesn't offer it, you do have the ability to go to another bank to get it if you need it. So if we go to the next slide, to get this particular, who gets this particular loan, or because it's called the highly affected sectors. It isn't sector specific. It is based more on the revenue loss that your business has had. The financial institution, of course, is the one that's administering it. The nice thing, it's actually available to sole proprietors as well, but unfortunately, it's still not available to new businesses. But to get it, you have to basically be financially stable and viable prior to March 1st. They're not going to look at you since March 1st. They want to make sure you were financially stable and viable prior to the pandemic, and that you didn't have any impaired loans prior to the pandemic. They're not going to look at your record from March 1st to now. It's all pre that you were viable before the pandemic. And the key here is that you can be in any sector, but you're going to have to demonstrate a minimum of a 50% revenue loss for at least 3 months within the 8-month period prior to your application. And those 3 months do not have to be consecutive. So basically, any 3-month period within the 8 months prior to your application where you have a revenue loss of at least 50% makes you eligible for this loan if it's something that you think that you could benefit from. So you can actually use it for anything. You can use it for to operate your business, to buy inventory, to do whatever you need. The only thing you can't use for, well, there's a couple things. One is to pay off another loan. You can use it to deal with your debt obligations. So if you have sort of a monthly payment that you have to make on a loan, you can use that money to pay that monthly. You just can't pay off the whole loan at once. So That's one of the key features that they're looking for. But other than that, oh, and I'll talk about another feature of it you can't use it for, but in a second. But it's a pretty open-ended in that regard. We go to the next slide, which is the last one. There's a couple of interesting criteria around this, though. In order to apply for it, you have to have actually applied for the wage subsidy or the rent subsidy. And the reason they're doing that is that makes it easier for the bank then to calculate your revenue loss. Because what you're going to do is provide the attestation forms you used for that application of the wage subsidy or rent subsidy to show your eligibility. And that's where they're going to see whether you had that 50% revenue loss over the course of certain months. Now, if you've never applied for it, but you are eligible, you're going to have to apply for it before being able to apply for this. But if you're not eligible for the wage subsidy or the rent subsidy, you still can apply for this. It's just going to take, they're going to want more information from you, like your financial statements, to make sure that you have that 50% revenue loss. So just because you don't get the wage subsidy or the rent subsidy or you're not eligible for it doesn't mean you can't necessarily access this loan. It's just going to take a bit more time for them to go through the process to make sure you are in that criteria. The only other thing, as I said, besides not being able to pay off a full loan, is that you can't use it for dividends, except if those dividends are being used as income for the people that run the company. And then you can use it for that, but you're limited to the amount you would normally pay yourself through dividends prior to the pandemic. So you can't, so that's sort of the limit that they put on that. Other than that, it's a fairly open loan. It is a loan. There's no forgivable portion at this point. Our reaction to this has been that this is something I think that those that are highly affected, again, they're targeting the tourism sector, hospitality, arts, recreation, but it is not limited to them. It is open to any business that has had a big impact on their bottom line. The unfortunate part is it is more debt that you accumulate. So we are looking and pushing government already to potentially provide a forgivable portion for this loan as well. So that's been one of our big asks since this came out earlier this week. And we'll continue to push the government to do that, to make this part of this loan forgivable for those that are able to access it. So as of Monday, this is something you can start asking your bank about, and if it is something that's of interest to you. So I wanted to make sure everybody was aware of this. This is the newest program that we call HASCAP, Highly Affected Sector Credit Availability Program. With that, I want to introduce our guests. We're going to bring up Laura Angelo and Tina Beauchamp, who are with us from the Canadian Payroll Association. And we're very fortunate to have Laura and Tina join us to sort of go through some of the more sticky, complicated pieces of what you need to get done to do your taxes this year, given, of course, a lot of the COVID issues that have hit many of us. So they're going to walk us through a bit of a presentation on how to deal with PD27s and the T4s, and then we'll get to your questions. So over to you, Laura and Tina, and thank you again for joining us here today.
Thank you, Corinne. Tina and I are going to review for you today the year-end reporting requirements, eligible employers who could take advantage of the 10% wage subsidy and how that's calculated. We're going to review the requirements for completing the PD27 form. We're going to look at the wonderful new codes that were introduced this year for the 2020 T4 reporting, followed by a Q&A period to answer the questions that you have. So on the next slide, I'll turn this over to you, Tina.
Thanks very much, and good afternoon, everyone. So I'm just going to give you just a brief update of the 10% wage subsidy, and then Laura's going to walk you through this new form we have to deal with, the PD27. Next slide, please. So back when the pandemic initially began, the government recognized, especially for small businesses, the shutdowns, the restrictions were going to cause a lot of hardship. And so they introduced a 10% wage subsidy for a very certain type of employer: individual or sole proprietors, partnerships, nonprofits, charities, and small Canadian controlled private corporations. So I would imagine, as the independent businesses that you are, you're going to fall into one of these categories, and you would have been eligible for this program. Next slide. So what the subsidy allowed you to do was calculate 10% of the eligible remuneration you paid your employees, And that includes your taxable income. So it did include things like salaries or hourly wages, bonuses. You could have included all of those amounts. And what you were permitted to do was reduce the income tax portion of your CRA remittance. You weren't allowed to touch your CPP or EI. Those had to be remitted in full, but the income tax portion could have been reduced to recover this amount. And it applied to pay dates between March 18th and June 19th, so a 3-month period. Now, keep in mind, the idea was that you were going to reduce your CRA remittance. If you were eligible for this program and you're now thinking, oh, but I didn't reduce my remittance, am I going to be able to get my subsidy? Yes, you can, and there's a way you'll do that on the PD27, which Laura will cover. Next slide. Now, maximum, this caused a bit of confusion when the program was initially announced. I think a lot of employers initially thought when they said $13.75 per employee as a maximum subsidy, that they had to keep track by employee of how much have I allocated towards Steve's payroll. That's not really what they meant. What they meant was your head count times $13.75. And that allowed you to include any employees that you had employed between March 18th and June 19th. So whether they were employed the entire period, you may have had people working initially and then had some shutdowns or some slowdowns and laid people off, maybe brought them back, maybe you didn't, maybe they continued to remain on layoff. Or you may have been one of those businesses that thrived through this. It's been kind of an interesting situation where some businesses are struggling so much and others seem to be doing very well. So some businesses may have hired employees. What you had to look at was your head count. And I'm going to show you an example on the next slide. But what's important to recognize was the maximum for the employer in total, $25,000. Next slide, please. So if I had employer A, and over that 3-month period, their headcount fluctuated. They had 6 employees, then they went down to 4, and then they went up to 8. So when they're looking at their maximum subsidy, they're going to use that maximum headcount of 8, multiplied by the $13.75 per employee, so 11,000 total. Employer B is a little larger, and they have a regular headcount of 20 employees. 20 at $13.75 would be $27.5. So that means that employer is going to be limited to that maximum of $25,000 in total. So that's how the maximum subsidy was intended to work. Nobody expected you to keep track by employee of how much subsidy you'd claimed on their wages. Just use your total headcount at that $13.75. But remember, if you are a larger employer, $25,000 for the employer was the maximum in total. So I'm going to pass it over to Laura, who's going to now walk you through this new form we all have to deal with year end, the PD27.
Thank you, Tina. So we certainly have received a number of calls from our members, emails and calls alike, on the requirement to complete Form PD27. So if you are an eligible employer, as Tina had identified in the introduction, eligible for the twos, you are required to complete Form PD27 if you reduce your remittances between those pay dates that fell between March 18th and June 19th, 2020. You are going to need to complete the form if you have not yet reduced your remittances, but you do want to take advantage of the 10% claim. And if you are an eligible employer that perhaps didn't participate under the 10% wage subsidy, but you did qualify for the CEWS, maybe you felt you had a better subsidy by fully claiming the CEWS, you still need to complete the PD27 form if you are eligible, did not reduce your remittance, do not intend to reduce your remittance, and you need to complete that form and indicate that your claim will be 0. because keep in mind your CEWS is reduced by an assumption of a TEWS if you're eligible. So we need to complete that form to declare that although I'm an eligible employer, I took advantage fully of the CEWS and will claim 0 on the TEWS. Next slide, please. Now, as an eligible employer, you're not required to complete Form PD27 if you claimed no subsidies. Between those dates of March 18th and June 19th, those are your pay dates. If no subsidies were claimed for those periods, either the TEWS nor the CEWS, you do not need to complete the PD27 form. And on the next slide, we're going to have a look at what the form looks like. So as we look at the Part A of the form, this is where we're identifying our business. We're putting our payroll program account number, the full 15-digit number, 9-digit CRA number, followed by your payroll account number, RP number, if you will. In Part B, we want to identify what type of eligible employer category we're falling into. In our example here, we've indicated as a employer that we do not have multiple payroll accounts, meaning we do not have multiple RP account numbers. If you do have multiple account numbers, you will select yes and indicate if you will be applying under each of those program account numbers, because let's keep in mind that we are only eligible for a maximum of $25,000 per CRA business number. We can't have $25,000 between each of our payroll program account numbers. And we're indicating that information in parts A through C. And on the next slide, when we look at completing Part D, in this example, we're looking at an employer who is taking advantage of the 10%. Now, a lot of employers, especially those processing a weekly payroll, will notice that there is only enough room on this form for 12 pay periods. In that instance, we are going to need to complete another form, a page 2, if you will, to continue reporting those additional weeks that we need to either enter as we're claiming the 10%, or even if we're claiming 0, we need to ensure that we do complete the form for all the pay periods between March 18th, the pay dates that fell with pay dates between March 18th and June 19th, even if that claim is 0. So on the next slide, please, we're looking at an example of an employer who determined they'd get a greater benefit by fully claiming the 75% under the CEWS program. So we can see in the first 2 periods, they took advantage of 10% under TEWS, and then determined they did get a greater subsidy by fully claiming under the CEWS. This employer is still required to report the $0 claimed and 0% wage subsidy. Next slide, please. Now, this employer had reduced their remittances for the entire period. So they have a total claimed of $4,760. When they are filing their T4 slips and looking at their T4 summary and how to complete that, on line 80 of the T4 summary, we're asked for our total deductions. That's going to be the total of what we actually deducted from employees. That's box 22 on the T4 slips. Now we go to line 82, and we need to report what we actually remitted. So we're going to look to our PD7 account, our CRA account of our statutory deductions that we have remitted, and we're also going to add the amount that we had withheld, reduced from our previous remittances under the twos. So what we remitted, and we actually had this confirmed from CRA in yesterday afternoon webinar that they presented. So we are including what we actually remitted plus what we withheld under the twos program for our total remittances. The PD27 now, as we can see, is an essential form that we need to use when we're balancing our year end, and absolutely pointing to the balancing of our T4s and our T4 summary. Now, on the next slide, we're going to look at the additional comments section. So this is where an employer who maybe has not yet reduced their remittances, but is eligible and wants to still take advantage of the program, you will enter in the additional comments section how you want that refund to look like. You can ask CRA to refund you directly as the employer, or you may want the credit transferred to your 2021 payroll remittance account. So the additional comment section does provide that for us, especially when we are claiming at this point and we hadn't claimed previously. And on the next slide, we're going to look at the final portion of the form, Part E. So this is a sign-off, and as an employer or a business owner, you can sign off this form, or you can authorize anyone else to sign this form off, for example, using your accountant or bookkeeper or payroll professional, because the name on this form is going to be the individual that CRA is going to contact for further information. Now, I'm going to turn the next slide over to Tina to discuss the new T4 codes.
Thanks, Laura. So we do have some slightly additional reporting requirements for our T4 slips this year. CRA has introduced 4 new codes that they'd like us to use. Next slide, please. So those 4 codes, what we are being asked to do is report the income, the employment income that we paid. And I've highlighted paid because this is based on your pay date. Anything that normally reports in box 14, and it still does report in box 14, but we're also being asked to report in one of the 4 codes based on payment dates. So for example, code 57, any pay dates between March 15th and May 9th. In addition to that employment income being in box 14, you're also going to record it in code 57. And those dates range from March 15th to September 26th. The primary purpose of this reporting is to give a little assistance to CRA. They're going to eventually have to investigate a lot of the government benefits they paid under the Canada Emergency Response Benefit, the CERB, and the Canada Emergency Student Benefit. Those were benefits that people could go online and apply for if they had lost their employment, and there was a minimal amount of income, $1,000 a month, that you could have in addition to applying for those government benefits. Unfortunately, and I think they had to make it easy to get, and the situation we were in, they probably didn't have as many restrictions as you normally, if anybody's ever applied for EI, there's a process you go through to be approved for that benefit. They made the CERB and the student benefit relatively easy to get. Unfortunately, that means there was also probably some fraud. Next slide, please. So this is just a quick example. I have an employee, it's a bi-weekly payroll, and this employee, Wanda, she was employed all year on a fixed salary, same amount each pay period, just for simplicity's sake in the illustration. But for those specific pay dates, those amounts now need to be recorded in each of those codes. So she has a fixed salary of $1,600 a pay period. So for the first 3 codes, 57, 58, and 59, it's capturing 4 pay dates in each of those date ranges. Code 60 which is the end of this reporting, only 2 of the employer's pay dates fell into that reporting period. Next slide, please. So this is just a quick snapshot of what the T4 looks like. Box 14 still contains 100% of this employee's employment income for the year. The amounts that are in 57, 58, 59, and 60 are for those specific dates. So it's still in box 14 because the employee still has to report that amount on their personal tax return. The items in 57 through 60 will have no impact on your employee filing their personal tax return. This is for CRA's use only. And again, it's going to assist them in determining who they may have to go and take a look at who could have potentially received those government benefits at the same time they had employment income, which may have disallowed them that particular benefit. So that really is the primary purpose of this reporting. The good news if you use a service provider, so if you are using a third-party payroll service provider to do your payroll and they do your T4 slips for you, they're ready to go. They know about this, they've known about it for a long time, they're prepared. I recognize some of you may be doing your payroll in-house, maybe you're using QuickBooks or some other program, and you may do your T4 slips yourself. You may have to take the time to do this additional manual process to populate those 4 boxes with the earnings from those specified pay periods. Outside of that, there's no other new T4 requirements for this year. It is just the addition of these 4 new codes. And currently we're only being asked to do it for the 2020 year. There's no indication it's going to go beyond this. Next slide, please. So before we pass things back over to the CFIB, I just want to take the time, first of all, thank you for having us today. And please take the time, if you like, to go and visit our website, www.payroll.ca. In our resources section, we have an area devoted to COVID-19. And while a lot of our benefits are for our members only, we've made our COVID resources available to the public. We recognize that it's an area that people need the help with. So please do take the time to go visit the website. There's some really good information in there that I think you'll find helpful. And I will pass it back to CFIB.
Well, thank you so much, Tina and Laura. And I see there are lots of questions and I want to get to as many of those as possible. So I'll keep this part short. But we have been recommending to people that they keep a journal. And many of you have questions on how to apply for various programs or what to include. And just keeping a journal of your thinking on the applications can, I think, help you in case you need to explain that in an audit. So just a reminder of that important tip, and probably very relevant now that we're at tax time. On the next slide, I think this is where we get to questions. So I'm going to ask Tina, Laura, Corinne to join me. And I know we've been getting many questions through the question box. And so I will maybe ask, you mentioned QuickBooks, and I did have a question about how does this work through electronic, you know, if you're using QuickBooks or another filing. Let me see if I can find the actual question. But maybe maybe you can elaborate on that, Tina and Laura, while I'm finding the question. And then Corinne, you probably have some in your box that you want to get to as well.
Sure. So if you are using a third-party payroll service, you know, the ADPs, Ceridians, those types of services, they're prepared for this. They have already set up the programming to do that reporting in those additional 4 codes. What I can't speak to, I mean, there's so many different systems people could be using, and a lot of times when you're a small business, your accounting software includes a payroll component. What I can't speak to is whether all of those have been programmed to automatically do this reporting for you, or if it's something you're going to have some manual intervention with.
Right. And so do you know the specific question was from Linda on the PD27 form. Any knowledge on how that's working through QuickBooks?
So I am not aware of your payroll software providers, I believe ADP has designed a PD7 report that can be extracted from the pay data. And I don't unfortunately know, Laura, if QuickBooks is offering that, but certainly the information is housed within the QuickBooks data. So, you know, whether you're able to extract and create reports on your own or talking to your customer service rep on how to extract and report on that data that you do have available.
Okay, and some other sometimes other webinar participants have done it, and they'll answer the question, and then we'll answer it that way. Heather has a question about that some other members are also asking about. What happens if you already filed T4s without any box 57 to 60 breakdown? Am I required to submit amended T4s? So that's Heather's question.
Not necessarily. In a lot of cases, CRA actually wasn't even prepared to accept T4s with those new codes prior to a certain date. So if a business closed, which sadly some businesses did, and they may have done their year end early, they don't need to do anything. They don't have to go back and redo those slips. If you've now kind of jumped on the bandwagon to file early in January, you don't necessarily have to amend them. It's possible CRA could come and ask you questions. So that's the only thing you need to be prepared for, because again, they weren't even set up ready to accept that new reporting in their electronic, especially in their electronic files. I think they're ready to go now, but a lot of people do things early, or again, unfortunately, if somebody was in a position they had to close their business, there's a deadline to get those last T4s filed much earlier than we normally do. So don't worry in that case, you don't need to redo them.
Okay, and this may also, I'm just going to stick on this theme for a minute because that was for the 4 boxes, but what about for the PD27? What if you've already submitted your PD27 based on the 1375 maximum per person and not the head count? Can it be modified, or how should it be handled? So how do you handle that situation? That's Rita's question.
So in a situation like that, you're going to want to send in either, depending on how you sent your form in, the PD27, you need to send an amended form in and probably return any subsidy that you received from CRA. Well, I guess if you've reduced your income tax remittance and over-reduced, you need to get that money in ASAP to avoid any further interest that's going to be applied to receiving too much, and an amended PD27. And I recommend that you put in the comments section of your amended form that this was not in any way a deliberate fraudulent action. This was an error, and now it's being corrected, and with it, send your funds in.
So make sure you amend your PD27s if you have made a mistake, but if there's on the T4, if you had not filled in those 4 boxes, what might happen is you might get asked some further questions, but there's no need to resubmit, just to clarify for everyone. Do I have that right?
You've got that right.
Good. Okay, hopefully that clarifies, because there are a number of questions along those lines. Corinne, I see you looking at your computer screen. I can tell you're squinting at your computer screen. Which questions do you want to put in?
Well, I have a few questions that I think there's a bit of confusion around the interaction between the 10% wage subsidy and the Canada Emergency Wage Subsidy, and what happens if you only take, if you take one. For example, I'll give you one example. So I have here, can I take the 10% subsidy if I already used the wage subsidy? So, I mean, maybe a little bit of a discussion around how those two interacted. And there's another question around, I did the 10% for 2 periods and then switched to the wage subsidy. So I filled out the PD27 only with the 10% months on it. Should I redo it to include the wage subsidy? So I think there's some confusion around how those two interact. So maybe you can explain that a little bit, and how the PD27 comes in.
The interaction, there is interaction between the 2 programs. We have our maximum 10% and then the 75% under the SUS. It's essentially not 85%. It's not 75 plus the 10. So to address the employer who had taken advantage of the 75%, it is reduced by any amount that they may have also claimed under the 2's 10%. If that eligible employer only took advantage of the CEWS and did claim 0 under the 2's, they are still required to fill out that Form PD27 and declaring that the dollar value and the percentage is 0.
Okay.
I hope I addressed both the
I think
questions.
so. So for the person that only filled out the PD27 using the 10% for the 2 months that they took the 10% wage subsidy, they're going to have to redo the PD27 even though they moved to the wage subsidy, because it's likely the wage subsidy incorporated the 10% within it, correct?
Yes, they need to, if they took advantage for 2 periods of the 10% and then determined, you know what, we're just going to claim the full amount we can get under the CEWS. That employer needs to fill out the 2 periods showing the 10% and the dollar value, and then they need to complete the form through to that pay dates through to including June 19th and declaring that they're claiming 0. So their form will still need to be completed in full for the period. The PD27, does need to be completed, showing 2 periods where I have a dollar value, and then the subsequent periods I'm going to have a 0 claim.
Okay, and then I have another question here about if an employee was ineligible since they were non-arm's length under the wage subsidy, will this particular employee be eligible for a 10% wage subsidy claim? Do you know?
The same rules didn't apply for the 10% subsidy. So the 10% subsidy was geared to those very specific types of employers, small business, not-for-profit, and any employee that was paid on their payroll. So as long as they were on payroll, they could take 10% of their total payroll. Unfortunately, and I recognize some of you do draw dividends and pay yourselves in different ways. If you weren't on the payroll, you unfortunately aren't eligible to claim a subsidy.
Right. So that's the ones that aren't allowed. It's ones that are the owner themselves, but non-arm's length could be used for the 10% subsidy. And just so that helps also, and I'll follow it up with a question that also relates to another question. If somebody is still not claimed the 10% subsidy, can they still do so?
Absolutely. So as Laura pointed out on that PD27, you fill it in, declaring how much your subsidy is, and then use that comments box to indicate, I didn't reduce my remittances, but I still want to take advantage of this program. Do you want the government to refund you? I mean, they prefer direct deposits. So hopefully you're set up with banking with them. Or they can apply a credit to your 2021 payroll account so you can continue to reduce your remittances in 2021 to recover that amount.
Okay, very good. So good news for those who maybe not have taken it yet and are eligible. You may still want to take a look and see if that's something that you can do. Laura, any more from you?
Yeah, let me go back to the theme we talked about, that if you made a mistake on the PD27, you should be correcting that mistake. Now the question is, how do you, so Suzanne is asking if you've already done your PD27 and you see by the presentation that you need to resubmit, how do you do that if you've filed it incorrectly?
I would expect you'll use the same medium that you filed your original. If I speak to filing an actual paper form, you will produce another paper form and indicate on it amended. If you're filing it electronically, you may not be able to actually type amended on it. Input in the comments section that this is an amended form and it replaces the original. And it sounds like this is from the same participant who erroneously thought it was the $13.75 per employee. But didn't realize it was limited to 10% of your gross payroll, whichever would have been the lesser, of course. So I would include that as a note in the comments section as to the calculation I first submitted was wrong. This is what our wage subsidy, this form replaces that original form. And it sounds in this instance, it will also be accompanied by the payment or the remittance to the CRA for the amount that was reduced in error.
So it's the same, you resubmit the same form and just make it clear somewhere, either in the comments if doing it electronically, or if on paper, make it just very clear somewhere that this is an amendment. And I would add to that, take a note in your journal that you've done this and the date you've done it, because sometimes we know with government that, you know, the things get lost or seem to fall into some black hole somewhere, and, you know, they may come back to you, and you want to have a little record of things you might not remember. So hopefully, Suzanne, that helps you. And Jody also had the same question, so hopefully that answers Jody's question as well.
And Laura, I just wanted to ask Tina, have you fielded any questions or walked anybody through yet how to amend that PD27?
Not yet. And to be honest, I haven't looked at the online portal to do it electronically. There may even be an option with CRA if you're doing it electronically to say, is this an original or an amendment when you go in to do that filings. With a lot of their electronic forms, when you initially log in, you're saying, am I doing an original, and you'll tick a box, or am I doing an amendment, tick the box. And that's the way that'll be processed electronically. But what Laura has suggested makes sense. When we know there's an error, we make an amendment and we clearly identify on the slip or the form that this is amended.
Okay, and I'm just going to continue with some of these executional details for people. Lisa's asking, where do I get the PD27? When is it filed? With corporate tax or now? And we use a payroll provider. Will they do the PD27? So some questions there for you from Lisa.
So you can pull the PD27 right off CRA's website. They have a fillable form. The example that we put on the slides, I actually pulled a fillable form, filled it in, and just cut and pasted it onto that slide deck. So you can absolutely download it right from CRA. Whether your payroll provider will do it, some may be offering this as a service. That's a question you'll have to have as to whether that's part of your year-end contract with your service provider. Is, are they going to do this new form for you? That's going to be unique to each service provider.
Great. And another quick one from Anna, and Laura, if you want to add to that too, I'll just.
I was just going to add that if you know, the form itself, once you have located it and download it from the CRA website, Google PD27 form, and up it will come. You have an option of mailing it in or sending it through My Business Account for those businesses who are signed on. I mean, that's a great service with CRA. Things are so much easier when we use that service of My Business Account. Thanks,
okay.
Laura.
I might answer John's question, because he was asking whether the PD27 can be, does it have to be mail or can it be e-filed? So you're saying it can be through the My Business Account?
Yes. Using the Submit Documents option.
Great.
And finally, there's no specific due date with that form, but it is part of your year-end balancing. So CRA is sort of saying, just get it done as soon as possible. June 19th has come and gone, so you don't have to wait till you file your T4s. You can get that form out of the way right now, and your T4s are still currently due. Whether we get some extensions, I can't answer. Right now, last day of February is still your date for T4s. But you can get that PD27 taken care of now, make sure it's in, and then do your T4s later.
All right, can I just confirm that you said that if they went through My Business Account and filled it out there, then they're good? They don't have to fill out the paper form? I just wanted to make sure that was.
Yeah, absolutely. Yeah, there is an option to file this through My Business Account. And as Laura said, it's a great service because you can always go back and see everything you've done through My Business Account to say, did I do that? Did I submit it? Was it accepted successfully?
Perfect.
Great.
That answers some of the questions I've been getting. So I just wanted to confirm that that was true. Okay. Very
Perfect.
good. Thank you.
Along those lines, Anna, these are probably, I'm going to fire a few quick ones at you. Can we email T4s to employees this year? That's Anna's question.
So we cannot email a T4 to an employee without their consent. We can do electronic delivery without an employee's consent, but that is when we offer a secure portal, privacy exists, email, CRA clearly defines that that is not a secure portal. So
Okay.
we would want the employee's authorization. Do you agree with that, Tina?
Yeah, absolutely. The security is the big issue because the T4 does contain things like people's social insurance numbers. And I know I've certainly had my email hacked in the past. And the last thing I'd want is my social insurance number and my legal name getting out there. An employee can give you their consent. If somebody feels comfortable and wants to give the employer their consent, that's acceptable. You'd have to be able to validate that that employee approved that method of delivery. So if it's unsecure, you require the employee's consent.
Great. Just a quick thank you to Dave and Donna for letting us know that QuickBooks have indicated their software is being updated, and it looks like that should be available in early February, and that those T4 boxes will be added. So thank you for that, Dave and Donna. And Tina and Laura, I think we may have sent you guys some questions directly. If you have any that you want to answer, you can put those out there. We usually do go a little over on these webinars, particularly when we've got lots of questions. I hope that's okay. I think we alerted you to that. And for participants, we understand if you have to go, these are obviously recorded, and so you can get the recording, but we will stick around and answer as many questions as we can. But Laura and Tina, do you have any you want to throw out there?
Sure, I have one that is related to the CEWS, the Canada Emergency Wage Subsidy, and whether or not bonuses are included. And yes, they are. The trick with bonuses and the way the Canada Emergency Wage Subsidy program worked, it is based on when an employee is considered to have earned the money. So if you have an annual bonus that gets paid at the end of the year, and that bonus was earned on the employee's performance for the entire year, you have to prorate to each week as to when it was considered earned. If you paid out something like a holiday bonus, a discretionary bonus, the pay period you paid it out is when it would be considered earned. So it really depends on the nature of the bonus you paid and the time period it was considered earned. Was it something that was earned over a quarter, over the whole year? You're going to have to prorate it to each period that it's considered earned. If it's, again, something like a holiday bonus that was just a discretionary gift before the holidays, include that in the pay period that you paid it out. But yes, you can include bonuses in the CEWS.
Great.
I'm wondering yeah, go ahead, Laura.
Sorry, I was going to address the question with respect to taxable benefits. One question is, on the PD27 form, are we including taxable benefits in the gross remuneration per pay period? And the answer is yes. Cash and non-cash, all amounts that make up our gross remuneration for that pay period. Basically, everything in box 14 is our gross remuneration, and code 7 if we do have some exempt status employees. And we are going to be able to claim up to 10% and reduce the income tax withheld, not the CPP, not the EI, just the income tax. In that same respect, when it comes to the new T4 code reporting, we are reporting everything that hits our box 14 or code 71 within those paid dates between March 15th and September 6th under the new codes, and this CRA has confirmed that includes cash and non-cash taxable benefits. So
I'm wondering also, I have a couple questions around folks who did not use any of the government assistance programs if they're required to fill out any of these forms?
Yes. Unfortunately, every single employer in Canada who processed a payroll on a pay date that falls in that date range is being asked to do this reporting. So remember, the primary purpose is to assist CRA in going back and reviewing who may have received benefits from the Canada Emergency Response Benefit and the Canada Emergency Student Benefit. When people applied for those benefits, there was very specific rules that you could have a limited amount of other income up to $1,000. But because they made the program so easy for people, and I had a couple family members who had to apply for it, and they said, I went online, I typed in some information, and next thing I know, there was money in my bank account. It was really easy to get. Unfortunately, when something's that easy to get, there's going to be some fraud. And there may have been some people who just didn't quite understand. It may not have been intentional, but they may have got benefits they weren't entitled to. This reporting on the T4 slips is going to assist CRA in determining who might we now need to go and take a look at to see whether they were really eligible for those government benefits.
So in other words, it's not anything to do with the employer getting government assistance. It has to do with whether the employees got government assistance and making sure that they can then check that. So I think that's an important distinction. So unfortunately for you, Noreen, that means you still have to do the T4, but she doesn't have to do the PD27, right? That's because she didn't take advantage of the wage subsidy or the 10%.
Yeah, right. If no subsidies were used, you don't need to do that PD27.
Okay, but the T4 is, and that would probably also apply then to Ron, what you're saying, because Ron says that he deducts EI from self-employed fishermen and reports their EI insurable earnings and report code 78 for the gross fishing income in the other information section of the T4. So does these still have to do box 57, 58, 59, and 60?
Yeah.
Same
So
deal?
We had a question like that come in. I don't remember which of those occupations it was, but it was one of the ones that have another code. Currently, all CRA is indicating is if you report income in box 14 or code 71 for a non-taxable, I hate to use the word Indian, but that is the term that CRA uses in their government legislation. Those are the only two codes, the boxes they're talking about. With some of those special occupations like fishermen, hairdressers, taxi drivers, where we report already report in a code, we haven't been asked to break those out. So at this point, I would say no. That fishing income will just get reported in the box it normally goes in, and there's no requirement to do those 4 codes.
Okay, well, there you go. There's a different perspective on that. So hopefully that helps. So yeah, I'll turn it back over to you. Any of you, if you have other questions, those are a couple that were burning in my inbox that I wanted to make sure we got out there.
Yeah, there's quite a few people weighing in that many of the software programs have this stuff auto-populated or are about to do that, just to let everybody know about that. I'm going to go to Dennis's question. This is an earlier question, but can you please confirm how to balance lines 80 and 82 of the T4 summary?
Make sure I'm off mute. So line 80 on the T4 summary is where we report the total deductions. So those are the totals that amounts we've withheld from our employees reported in box 16, 18, and 22. There's a total of all our T4 slips. Now, on that summary, we also have to put in line 82, total amount remitted. So if we've already reduced our remittances under the 10% TUS program, let's say, for example, as an employer, I've reduced my remittances by $5,000 over those 14-week period. On line 82, I am going to indicate what I actually remitted plus the amount that was not remitted because I was taking advantage of the TUS program. So what I should have what I'm reporting as total remitted does include my twos amount, which I'm also going to have in my good audit records, showing my pay register total deducted, which balances to my T4 summary, line 80 of the total deducted. Now, total remitted, of course, includes the employer's portion of the CPP and EI and the employee's total income tax withheld, even if I have reduced by the 10% too. So I hope I didn't get cause confusion in that. Essentially, line 82, total remitted, is what we actually remitted plus what we have reduced under the twos program. And your PD27 form's going to supply that reconciling amount for you.
Great. Okay, thank you. Hopefully that helps. I'm at that stage in our webinar where we start to wrap up with some final questions, and then typically I go around to everybody for just a quick final advice or comment. But Tina and Laura, let me start with you. Are there any other questions that you want to put forward for the group?
I think I have pulled all the ones that came to me. Oh, actually, there was one more. Somebody did ask, because the CEWS, the Canada Emergency Wage Subsidy, continue to extend right through the end of the year, and it's going to keep going in 2021, why are we only doing 4 codes in the other information section on the T4 to a date in September? Are they not adding more codes? No, it's only those 4 codes. And again, I recognize when CRA asked us to do this, they spoke about the CEWS. We've been told by our contacts that the primary purpose of this reporting is for CRA to look into Canada Emergency Response Benefit and Canada Emergency Student Benefits. They may tie it into some CEWS audits in some way, but they're not asking us to report through the end of the year. So it's only those 4 codes for those dates between March and September.
Okay, thank you. I think that helps clarify why, a little bit of confusion about why those dates. Laura, anything else in your question box there that you want to put for the group?
Well, I'm just going to review. We did speak about it, but to clarify, amounts to report on the PD27 in Part D, think of it as the same format that we use when we fill out our remittance advice under usual circumstances on our PD7. For the paid dates that fell between March 18 and June 19, on the form PD27, we first indicate what is the pay period date range, start and end, that held those pay dates. Total gross payroll, which is your gross taxable remuneration. We are reporting the total income tax withheld. We are reporting the employee's CPP plus the employer's CPP contributions, employee's EI plus the employer's EI match on those premiums. And then we indicate that we will claim up to 10% of that gross remuneration, limited by our total head count up to that maximum of $13.75 per employee within that entire date range, regardless of the status of the employee, and a maximum of $25,000 claim for each employer, and that's our first 9-digit CRA number. So all RP numbers fall under one 9-digit CRA number, and that total amount that's eligible maxes at $25,000 per employer. I'm hoping that added some better clarity.
Okay, thank you, Laura. Corinne, any last questions you want to throw in before we do our final wrap-up comments?
Yeah, I'll just do a couple quick ones on the HASCAP and Canada's summer jobs, just 2 that are coming up a few times here. Just on the new loan program, lot of people are asking about, well, where's the comparison, revenue comparison coming from? And it's, and I know it's a bit confusing because we're saying over the last 8 months, you have to show that you've had a 50% revenue drop in at least 3 of those months. And it's basically going to come from your application to the wage subsidy or the rent subsidy. So anything you've submitted through the rent subsidy or the wage subsidy, they're going to look at those attestations that you made where you said you've had at least a 50% revenue drop. So it really depends on what it is you put into your wage subsidy or rent subsidy application. They're doing it this way because then it can be processed more quickly by the banks rather than then going all through all your financial statements and you resubmitting all kinds of information. I think they're trying to do it so it's a bit easier. So that's how they're going to do the revenue comparisons. I hope that clarifies things a little bit for a few people that asked the question about how are they going to figure out the revenue drop. And on the Canada Summer Jobs Grant, I just wanted to mention we have a little bit of new information there. We just wanted to make sure we share. We had a number of questions in this week and last week as well about non-arm's length. Would they be eligible? They are not eligible for the Canada Summer Jobs Grant, so you cannot hire your own children, for example. That is not eligible. And the second piece of information is it has to be a new hire. You can't use the Canada Summer Jobs Grant to hire someone who you already have in place. It has to be for a new hire only. So I wanted to just clarify a couple of those things. And we see Rachel's coming up because I think she wants to probably add to that.
Yeah, just wanted to clarify, it's not just non-arm's length, so it's immediate family.
Immediate family.
So you could, yeah, exactly. And there's also another qualifier if you have like an officer or director that has that employee, potential employee is immediate family, that also would not be eligible.
Thanks for that clarification. I'm going to sneak in 2 more questions and then we'll wrap up. The first one is from Myra, and that is, she wants to clarify the non-taxable benefits amount. So she was told by us, I think, that non-cash taxable benefits amounts are not to be included in the PD27, but included on boxes 57 to 60 on the T4, and just wanting to confirm that that's indeed correct. These things can be confusing, I know, and changing, so just she wants to confirm that that's sound.
Well, if it's non-taxable income, it's not processed through payroll, it's not reported on the T4, and it wouldn't be included in those codes. Absolutely any benefits that are taxable, so your employer paid life insurance, for example, that is part of box 14, that would be part of codes 57 to 60. If there's a benefit you could provide that's considered non-taxable, paid through accounts payable, or even if you use your payroll system to process it, if it's non-taxable, it doesn't touch the T4.
Okay, so Myra, it looks like hopefully that clarifies for you because you're asking about non-cash taxable benefits. So those would not be included.
Well, if it's taxable, yes. So if it's a non-cash taxable benefit, like employer paid life insurance, it is part of box 14. It will be part of codes 57 to 60.
Yeah, she's asking about non-cash taxable benefits.
Yes, so those are absolutely included. And the best example is employer paid life insurance. That's one of the more common ones.
Excellent. Sorry about that. I think I just added to the confusion. So it looks like the advice you were given was solid. And just ignore me. Okay, the other one I just wanted to throw in is lots of follow-up comments once we were talking about the SAFE portal. So is Google Drive a SAFE portal? My business account we talked about that, but what about a direct upload via Teams, chat messaging? I don't know, and I'm not sure Laura or Tina, you would know the answers to that, I'm just throwing it out there as lots of people had that question. So we can look into that and get that information to you on the next webinar if nobody knows, but I thought I'd put it up just because there were a number of questions and comments about that.
Yeah, I would say anything that's not secured with a user ID and a password wouldn't be considered secure.
Yeah. Okay. Good advice. So Okay, let's do our wrap up. And Laura and Tina, typically what we do is we just say a few words of to wrap up. And I'm wondering if in your cases, you might include just where, again, repeating where to go for additional information. Clearly, people are struggling with just understanding what, where, how. And on this one, it's as our first Einstein quote said, taxes are the most complicated thing to understand. So you're in good company, but you might conclude with that. But Corinne, I'll go to you first for your concluding comment, and then I'll go to Laura and Tina, and then I'll wrap us up.
Great, thanks, Laura. And I want to thank Tina and Laura from the Canadian Payroll Association for joining us today. We really appreciate it. I think there was a lot of really good information and more questions than we can possibly answer, but hopefully this will also help inform both our FAQ page, as well as I think you talked about the Canadian Payroll Association having some good information on this as well. So we encourage you to go look at those pages, and certainly you can give us a call if we didn't get to your question or you don't feel like you have a clear answer. We'll continue to do what we can to get you the information. We still have a few weeks left, of course, in during the tax period coming at us. So hopefully we can still answer your questions, and reminding everybody that we do have a webinar next week with CRA that's going to talk about many of these same things and a few more on how to do your taxes in this very complex year. But again, just reminder that we're here to help and we're here to support you. If you also have feedback and advice for us on any of the other programs, please bring it to us. As we said earlier, things are moving now in Ottawa again, and we feel like we're going to start hopefully getting a few more answers and then the opportunity to push more of an agenda. So we really appreciate your input through these webinars and through our other forums to help us make sure we're getting into getting the right information into the people that can make the decisions and hopefully make things just a bit easier during these pretty challenging times. So until the next time that you're able to join us, thank you for being a part of our webinar today. And I'm going to sign off and leave it to my colleagues here.
Thanks. Laura, any wrap-up comments from you?
I would like to thank the CFIB for inviting Tina and myself. It was my pleasure to answer the many questions, and unfortunately we did not get to all the questions, but Laura, the CFIB can always reach out to the CPA to provide clarification on any payroll related issues. I want to thank all participants today and wish everybody a great upcoming weekend, and stay safe and stay healthy. Thank you.
Thanks, Laura. And CFIB and the CPA have had a long-standing good relationship where we work together on things, and so thank you for that. Tina, let me go to you for your last comments.
I just want to mirror what Laura said. Thank you so much for having us today. It's our pleasure. We live to talk about payroll. I would invite your members, again, please, if you want, take a moment and go check out our website, payroll.ca. In our resources section, we have an area devoted to COVID-19, and those resources are available to the public. You will find some of our resources are member only, but those COVID resources, we have made those publicly available, and there's lots of good information in there that I think you'll find very helpful. So thank you again, and again, stay safe, stay healthy, and let's hope the economy starts to move in a positive direction.
Yeah, we're still waiting for the kind of the spiritual beginning of 2021. I think many people have said this feels more like Q5 of 2020. So that's right. So I want to thank you, Tina, and I want to thank Laura. Not many people live to talk about payroll, but we're very glad that you do, because you've added a lot of insight and help and a bit of a deep dive on these two important new topics. And I'll just remind everyone that we'll be here again next week with CRA. So feel free to join us then. Some great resources mentioned here. Of course, the deck is available for you on the side, and we send out always these webinars. So if you want to listen to the parts of the presentation again that you didn't catch the first time around, we'll be sending out a recording of this for everybody. And the tax time, I guess, is the next the next hurdle for all of us in the COVID challenge that we're in. So we'll wish everybody good luck with that. that, and we look forward to seeing many of you next week. And don't hesitate to be in touch in between then, and we'll be updating our website as well with your questions, but the CPA website looks like a great resource. And with that, I'm going to end the webinar. Thanks everyone, hang in there, and we'll see you next week.